I'm going to use this video to explain IFRS 16 lease. Lease is actually when you are renting a particular asset and you are known as lessee. The one that having the legal title, we will call him as lessor. So in this case, you as a lessee, you are paying the money to them. But for lessor, they will give you the asset for you to have the right to use that asset. The asset. So this is actually renting a particular asset for your business use. And with this kind of arrangement, how are you going to record in your financial statement? In this video, we were particularly looking at lessee accounting. Lessee accounting, if without IFRS 16, we are going to record it as our expenses. In year 1, we are going to debit our rental expense and credit our bank. Assuming this case, we are telling you that we are renting a shop lot, 3 years rental and 100,000 per year. So first year after I pay, I'm going to debit 100,000, credit 100,000. So this is going to happen in year 1. In year 2, same things. We will debit expense, credit bank. Year 3, we will do the same things. But imagine, if you are doing this kind of things in year 1, year 2, and year 3, you are actually against with the substance over form concept. Substance over form tells you that we must record our items based on the economic substance rather than the legal form. In legal, lessor is actually the legal owner. But in substance, this lessee is the substance owner. What we call it as substance owner? Substance owner means we are the one who use the asset to control the use or right of use to get the future economic benefit. Therefore, according to IFRS 16 or according to substance over form, we should always record these transactions based on the economic substance. Just like you are borrowing car loan from bank to enjoy the use of that car. The one that actually driving is not bank, is you. So you are the substance owner. So in this case, since we are actually argue that this is a substance owner must record this as their asset in their SOFP, in upfront. In upfront means at the initial recognitions, we should record an asset. This asset, we call it as rights of use asset because we are having the rights to use the asset. But when we debit right of use asset, we will need to credit another places, particularly liability. We call it as lease liability. This is because when at the initial stage, for example, now you are signing a lease contract, and this lease contract will need you to pay the lease payment in the next 3 years. So in that particular situations, you will need to have to recognize a liability now because you are owing to lessor. Therefore, we will need to recognize a liability at the initial recognition. So this is very important because IFRS 16 is created to align with substance over form and to prevent any of the balance sheet. Practice. What does it mean of the balance sheet? Imagine you are using this particular method to prepare your accountings. We don't see any asset or liability in your balance sheet as or FP. So this is actually not giving a factful representations or true picture to the users of financial statement, because users of financial statement would like to know what kind of asset or what kind of liability for you to have that asset to run the business. For example, if an airline business, they rent the aircraft from companies, but if they are renting it following the most simple accounting, they are going to debit expense, credit back. But it is not logic that an airplane business doesn't have aircraft in their non-current asset. Therefore, this off the balance sheet is something that will hinder your factful representations. Therefore, specifically to report it at the economic substance and to prevent off the balance sheet, we are going to recognize an initial recognition by debit asset, credit liability. And subsequently, we will have our subsequent adjustment, and we will debit in here to deal with this right of use asset. We are going to debit depreciations, credit accumulated depreciations across its lease term or useful life, depending the case. Or on the other hand, for lease liability, you are going to pay the money. So you are going to debit lease liability, credit your bank over the lease term. So over the lease term, it means that one day after the lease term, your initial recognition will become 0. And not to forget, lease liability is something that is adding up the amount that you are going to pay in future. So since I say it's future, it is wrong that you entirely put 300,000. It is wrong. The reason because is this 300,000 adding up the future payment is a future value. So you will need to bring it into present value. So when we are dealing with present value, after 1 year, we will need to unwinding the interest, and we are need to do this adjustment by debit interest expense and credit the lease liability. Because when you bring the 100,000 to present 90,000, so after 1 year, you need to move back to future value. There is a 100,000, there's a 10,000 is your unwinding interest to make your present value back to the future value. So this is the general treatment that we need to do under initial recognition and subsequent recognition. And with that, let us look at our example for today. There will be two scenarios. First scenario will be lease pay in advance. Second scenario will be lease paid in arrears. So this is very important. Let me draw a timeline to all of you. And in lease questions, you always need to remember these things. So assuming this is year 0, meaning to say now, and year 1, year 2, and year 3. If this is now, year 0, if you are paying the money in here, every year 100,000, according to this case, 3 years. So if year 1 you pay at the end of now, year 1, you pay 100. At the end of year 1, meaning to say year 2 beginning, you pay 100, and year 3, 100. So this is called payment in arrears. Payment in arrears means you pay after 1 year. So you will need to discount back to current. Positions. So discounting back to current positions. So this is from future value convert into present value. If it is paid in advance, year 0 still the same. We have year 0, year 1, year 2. But the first payment you are going to pay in year 0, meaning to say now. You pay now, meaning to say now you don't have a liability. Technically you just credit bank. And the second payment you will pay in year 1. Third payment year 2. So if pay in advance, you will need to discount these two figures into your present value only. So this is the difference. If pay in arrears, there are 3 payment, and these 3 payment you will need to discount back to present. If it is pay in advance, these 2 that you pay in year 1 and year 2, that you pay in year 1 is related to the entire year 2, you pay in year 2 is related to entire year 3, you will need to bring into present value, and this is not your liability. In fact, this is credit bank. You will need to pay it directly now. So since we already understand the different payment mode, so in exam or in scenario, you always will dealing with lease pay in advance or lease pay in arrears or pay in 1 year later. So this accrued lease and this advance things is very important because will affect your calculations of lease. And I always tell my students to follow initial recognition steps. First step, compute lease liability. We will need to ascertain when the moment we sign this contract, how much is the present value of this future liability. So we are still under the same example, shop lot, lease, and 100,000 per year. So we have an options to purchase at 150,000, meaning to say after the lease term, you can have an options to buy the asset, with the extra money, and this extra money is 150 in this case, together with in this payment you are going to pay in the last lease payment, meaning to say if let's say you are actually paid in arrears, your last lease payment you need to include 150 or purchase option. If it is a payment in advance, the last payment in year 2, you are going to include these particular options. So in this case, there are reasonable certains to exercise the option. So meaning to say, confirm we are going to exercise the option. Sometimes questions can change to not to exercise the option. I will let you know what to do. And a useful life of shop lot will be 5 years. So when the moment they say reasonable certain to exercise the options, you will always need to use useful life because we will continue to use that asset. And when we depreciate, we will use 5 years. If questions say not reasonable to exercise the options, later the depreciation, we are going to ignore this 5 year, we will use the lease term. And this particular line will impact on your depreciation later in a subsequent part. So we will talk about it later. Let's calculate our lease liability. So we have our lease liability paid in advance. So pay in advance, very clear. Year 0, you paid already. Year 1, you will need to pay first payment 100,000. Then this year 1, you pay 100,000 is for year 2. Before year 2 start, you pay year 1. And before year 3 start, you pay in year 2. Not to forget, year 2 is the last payment and you need to include 150 because they are reasonable certain to exercise the option. So 250. Question will give you discount rate and you will just need to discount back to your present value. Times it up and you will get your present value of the lease liability is 313,320. So this is your present value of liability. And if it is payment in arrears, first year, at the end of year 1, you will pay 100,000. Then after year 2, you will pay another 100,000. After year 3, you will pay the last payment 100,000. And not to forget, you will need to include this 150 because you exercise the options. So this is your payment in arrears. And you adding it up. So in payment in advance, your lease liability is 313,320 because there's first payment you didn't include as liability since you settled now already. You didn't owe other people. But lease in arrears, right? You will need to include first payment, second payment, and third payment plus the purchase option. So once you calculated your lease liability, only we can go to the second steps, which is calculate right of use asset. So meaning to say, the first critical steps you need to do is to calculate lease liability. Without having a base, meaning to say without having this lease liability, you cannot calculate your right of use asset. So you can see my right of use asset formula will be, if it is a payment in advance, you will need to include your first payment that you paid now, because when you credit bank you pay directly, you will need to debit right of use asset. It is form part of your right of use asset. So the first payment that we didn't put in liability but we know that we paid is 100. And with that, your first payment is 100, and if you're adding up the lease liability with this 100, your right of use is actually 413,320. So meaning to say your lease liability plus your first payment will be 413,320. So if you do a double entry, you will see debit right of use, the asset, credit lease 313,320, and you have first year payment, the bank, 100,000. And you see it is balanced. But not to forget, in my formula I tell you, you need to plus your direct cost and minus lease incentive. Direct cost is necessary for you to get the right of use asset to make the lease happen. So it's part of your right of use asset, like your IFRS 16 direct attributable cost. So since my example here tell you direct cost 2,000, lease incentive 500. So your direct cost, I'm going to include 2,000, and my lease incentive is the discount kind of things. I will need to minus 500. So my right of use become 414,820. And the difference in 101,500 is actually your first payment plus the cost you need to pay and minus your lease incentive. Can you see? It's balanced. So we are trying to say this right of use asset 414,820 is forming from your lease and your payment directly now, and your initial recognition double entry. You will recognize a right of use asset in SOFP, lease, and you need to minus your bank account. For lease pay in arrears, more straightforward because we don't have a first lease payment, so 0, because everything will be owing to the lessor. And direct cost still 2,000, lease incentive still 500. So we just straight away take the lease liability plus direct cost minus lease incentive. We will get 388,860 as our right of use asset. So debit right of use asset and credit my lease. So the difference is actually your direct cost and your lease payment. Net off, that will be your bank payment. You need to pay to other people 1,500. So 2,000 you need to pay, negative 5,000 is your income, you will need to pay 1,500. And you see, end up balance. So this will be your initial recognitions. So very important. So once we recognize this already, every year later we are going to do adjustment. So question tells you lease term is 3 years, useful life is 5 years. So now we will need to calculate our depreciations. The rule of thumb here is that if you are going to exercise the options, we will use useful life because you will continue use. If you are not going to exercise the options, we will use the lease term, meaning to say in this case is 3 years. So in here, 3 years. So 3 years is the lease term, 5 years useful life, and we are going to exercise the options. So we are going to depreciate by 5 years. Bear in mind, if I tell you not to exercise, you need to buy 3 years. And both is 5 years. And we depreciate based on your right of use asset. So your right of use asset is 414,820. I'm going to divide it by 5 years. Likewise, my right of use asset here is 388,860 divided by 5 years. So every year, I will depreciate by this number. Debit depreciation, credit accumulated depreciation. Depending which mode of payment you get. If it is paid in advance, this one. Paid in arrears, then this one. So this is the differences. And finally, just now I tell you, we will need to adjust with the lease payment to reduce our PV of lease liability, and we will need to adjust with the interest expense. So how are we going to calculate that? So if we're coming back to here, you will realize that your lease liability 313,320, we are going to put it over here, 313,320 as our starting. So let's talk about lease pay in advance first. So 313,320, you didn't pay any lease payment in year 1 because you pay in cash that already credit bank. So no liability movement. So straight away, you times with the interest given in the question, 6.7%, assuming it's 6.7%, and you minus it off, you are going to get 334,312. This is your balance of the liability after 1 year. Then this will be your brought forward. Your lease payment for second year is 100,000. So we will need to pay 100,000 because it's paid in advance. So we will need to pay first. Then only we charge interest. We charge interest, meaning to say net of 334,312 minus 100k, which is 234,312 times 6.7%. You will get the interest 15,699, and you net it off, you will get 250,011. And the last payment is 250. So we are going to minus 250. So you still have 11,000. No, sorry, you still have 11 ringgit at the final year payment. Now, please take note, in the final year payment, this interest is always balancing. Balancing meaning to say, we will just take the difference and we expand off in interest. We no need to take the different 11 ringgit times 6.7. If like that, you forever cannot resolve this particular balance, because at the end of year 3, we have and the lease term must be zero liability. So this is your lease pay in advance, and you are going to, for this lease payment, you are going to debit your bank and credit your lease liability. That's why you minus it, because lease liability reduced. For this interest, you are going to debit interest expense, and you need to credit your, there's a mistake here. For this lease payment, we are going to debit our lease and credit our bank because we paid the money. For your interest, we are going to debit our interest expense and credit our lease because our lease increased with this interest. This is called unwinding interest. Previously, you bring it into present value is 313,320. This is year 0 present value. And now you need to bring back to year 1 because year 1 already passed. So you need to unwind this interest, and you finally bring back to, at the year 1, not year 0, the liability is 334,312. So this is unwinding interest. And for this part, lease pay in arrears, we are going to do the same. Liability 387,360. We will include the interest, and we will need to minus the lease payment. So the first lease payment is 100,000. You will get the carrying value, carry amount, and this is your beginning. Interest times 6.7. You charge interest first, then only you will pay, because this is paid in arrears. Pay in advance is you pay first, then you charge interest. This is you charge interest, you pay later. So you pay second year 100,000 as well. So net it off. And the third payment, okay, this is your balance at the year 3, and you need to charge your interest. And your third payment is 250. If you do like that, if your answer able to cross 0, then it's good. But obviously you see there's a 4 ringgit here. So this is again, we are going to use balancing. So balancing 15695, and to make it 0 because it's the final year. And you are going to do the same. I'm going to debit expense, record it as expenses, and I'm going to reduce it in our liability. This is debit depreciation, credit accumulated depreciation. So until year 3, your liability 0, and you depreciate until year 3, your particular right of use asset will become 0. That's it for IFRS 16. I hope you can learn something from this video. Thank you so much.